Good morning, everyone. Welcome to the Macro Snapshot. We are Wednesday, October the 8th, 2025. Let's see what's going on. No data still in the US. It looks like the government is still shut down. Let's just start with the currency. So we have the dollar index. Interesting level. You see here it's breached the 100-day EMA, which is this line here. So it's pushed above. It's also pushed above its Fibonacci, the 61.8% retracement from this most recent sort of impulse here. So this is an interesting level. The question is, does it have more energy? As you can see, this is quite a key overhead resistance here. A lot of resistance at this point. So we can say something around about 98.5 is a key level. It's not so much sort of US dollar strength, I would say, at this point. I mean, the market was extremely stretched short, so it could be a bit of a short squeeze, a bit of positioning unwind. But the reality is, excuse me, that the US government is still shut down. The US government seems to be probably going to be shut down for another week or two or something like that. So the point is, this is slowly sort of chipping away at GDP and confidence in general. So really, the weakness seems to be coming from other currencies. And if we look across, let's start off with the New Zealand dollar. We had interest rate decision last night from the RBNZ. And as you can see here, we had a big push down. It's subsequently given back about half of the move. But basically, we had a big push down last night, weakness in the US, in the New Zealand dollar versus the US, because the Reserve Bank of New Zealand actually cut by 50 basis points, not by 25. Now, the market was split going into the meeting. There was a 50% chance of a 25 or 50 basis point cut. They went for 50 basis points. And if you actually look at the statement, was fairly dovish, essentially saying that they would be prepared to further lower the overnight cash rate, so the OCR, basically signaling that there was a lot of spare capacity in the economy. There were downside risks to medium-term activity, and therefore also downside risks to inflation. So downside risks to inflation, a lot of spare capacity. So overall, quite a concerned statement and fairly dovish. So possibly new weakness in the New Zealand dollars, further weakness in the New Zealand dollar is possible. And just looking from a technical perspective here, I just did like sort of a Fibonacci measured move here. It does measure down a bit further down, into this sort of level here at 56, even into 55. So I think on this bounce here, but that also though is the retracement here. See the big sort of 61.8% retracement longer term. So it's a pretty key level here. Let's call it 57.70. Very key level here. The market for the moment's bounced off of that. But if there is any further evidence of weakness in the New Zealand economy, that could be breaching there and going further down. As you see, it seems to be in some kind of downward sort of channel here. So a New Zealand dollar weak. Secondly, in Japan, we've had pretty extraordinary move here in the yen. Just put it here on the futures. So up to about 152, I think it is. But if you look here on the yen, we've had a huge move down since Takeishi's sort of election to be president of the LDP. And you can see here we're down about 3.5%. So a very big move. Now, is that justified? To me, it's starting to look a little bit, I'm not going to say overdone, but the market's rationale here really is that Takeichi will pursue a policy which is more expansionary, more fiscally stimulative. That's probably good for sort of stocks, maybe trying to pump up the economy a little bit, but really not much in favor of the BOJ hiking anymore. And if you actually look here, let's just have a quick look. You can see that the chances of a hike have diminished quite dramatically. So what this is showing here, if you look on the right-hand side, this is in percentage. You can see before her election to become president of the LDP, the market was assigning a 60% chance of the BOJ hiking in October. So that's the next meeting in October, a 60% chance of a possible hike. And as you can see, that's fallen dramatically. We're now down to about 22, 24, 25%. So the market is essentially saying, whoa, the BOJ is probably on hold. They're not going to be hiking in October, most probably, and possibly even December next year. If there is going to be a hike, there may be less hikes and going to be delayed. So therefore, what that means is that the Japanese yen is being whacked, basically, is taking a lot of the breach of that, is taking a lot of the pain for that. So if you see here, though, if you're just looking here at the futures contract, we are getting to some kind of triple bottom here. And you have to say to yourself, is this, does it have more room on the downside? I think I'm going to be looking for some stabilization here and maybe even just want to have a look here on the USD JPY, just on the spot chart, just to get another sense of that. Just give me a second here as I bring this up. Yeah. So you can see here that we are at levels, at what are we, 152. So moving averages moving up. We're definitely breaking out of this range. Now the question here, does this have more energy to keep on going up to, what we saw previously in the beginning of this year and last year, of course? Does it have the energy to get up to the 157s, 158s? I don't know. Then, of course, if it starts to do that and sort of rise in a disorderly fashion, there's going to be talk beginning again of intervention by the Ministry of Finance and whatnot. So this is an interesting one here. It's still a very powerful uptrend here, a breakout. So I'm just going to see if we just have to look for any signs of exhaustion and maybe any weakness coming in from the US dollar in general, because this does seem to be something which is running out of steam. But nonetheless, more further weakness there. If we also go back to another currency, if you look at the euro, which is, where is my euro? Where is my euro? Sorry, I'm just going to bring up the euro, which is here. Again, just looking on the futures chart, you can see the euro also has been fairly weak over the last, couple of weeks or so. It's breached now the 50-day moving average. It's just touched on the 100-day EMA here. So it is these EMAs are starting to roll over, and we are seeing some weakness. Now, if we just draw this across here, you can see that on the futures here, that 1.11610 is a pretty key level down here. Could find some resistance, but that's also a bit weak. And part of the reason for that, there's been some uncertainty, as we know, politically in France. And also the data is not necessarily great. For example, this morning we got out of Germany, we got German industrial output, which came in very, very, very weak. Expected the industrial output to come in at -1%. It actually came in at -4.5%. So a really significant sort of underperformance there by German industrial output. And that's not great for sort of sentiment in terms of the euro here. Now, some people already this morning are saying that German industrial output, there were some quirks. It was the summer holiday. There were some technical issues with the numbers. I don't know, but it's not trending in the right direction. Nonetheless, what we can see is weakness in the euro, weakness in the New Zealand dollar, weakness in the yen, and that's causing the dollar to remain a bid at this time. But again, nothing really much coming from the US side. It's not as though we're getting wonderful earnings and the government is functioning and whatnot. There's a lot of stuff happening. And I was reading some research this morning, actually Bob Elliott, essentially pointing out that if you look at the tariffs are being collected, and a lot of the evidence, although it's complex, a lot of the evidence seems to be pointing to the fact that the US consumer, rather than overseas or non-US exporters, it's the US consumer or the US wholesaler who is eating the tariffs, and it's about 1%, according to Bob Elliott, of GDP. So it's almost like a 1% tax on the GDP on American consumers. And at a certain point, is this going to start weighing on households which are already having less wage growth and already sort of starting to feel a bit more pressure? So let's not forget about tariffs, that this is a sort of an ongoing structural dead weight on the US economy. We shall see. Okay, now just in terms of that German, so the weak data, also if you look at the bonds here, you can see if we look at the, where are my bonds? If we look at the German 10-year, you can see here a big positive green candle, big sort of push out here. And that's, a little bit was it was going up, but also on the weak data from the German industrial output, it did push it a lot higher. And you can actually also see something like the Italian bonds also ripping higher. And what actually surprised me was the French bonds also ripping much higher. Not only was that sort of on the general economic weakness, but actually specifically in France, there's a deadline tonight, so Wednesday night, which the French President Macron has imposed on his outgoing Prime Minister Le Cornu to try and form a new government, to try and get the budget passed, some kind of agreement or accord on the budget. And some of this positivity, which we saw in the French bonds, was the idea that that Le Cornu, the outgoing Prime Minister, said that there was potential for a deal, maybe with the socialists. They were going to leave aside for the moment pension reforms. Of course, pension reforms would actually improve the fiscal situation in France, but it seems for the moment that's going to be put in the too hard basket and be left aside. So the French bonds are reacting positively to that, and in a more general sense, some of the weaker data are coming out of the Eurozone. So it'll be interesting to see again if there's no agreement reached by this evening in France. We could see a little bit of reversal there. So let's keep an eye on that and also keep an eye on some of the spreads. So if we actually have a look at some of the spreads here, where are they? Let's just try and find. So I'm just trying to find my spread here between France and Germany. There we go. So what you can see again, that the spreads, they did blow out quite a lot in all this political uncertainty, almost up to about 87 basis points. But as you can see, not only the outright price, as that's gone up, the spreads have contracted a little bit. So now we're talking about 84 basis points. So that's sort of calming down a little bit. But again, we have to keep an eye on headlines because that could all be reversed if there's no deal reached between the socialists and the sort of the centrist bloc, sometime in the next basically kind of 12 hours or so. Okay, in terms of what's going on today, we don't really have much data or anything like that. What we do have is the FOMC minutes, which are being released. It's a little bit old news, but in the absence of any sort of data, the market is looking to try and get any direction it can. We want to look at what the degree of internal divisions at the last FOMC meeting. If you remember, the Fed did cut 25 basis points. Some people were much more dovish, like Miran. Others were sort of a little bit more hawkish. So it's going to be interesting to see whether the hawks are sort of more in charge, or the doves are in charge, or the centrists. And that could actually, in the absence of data, push the markets, especially the short-term interest rate markets in the US. So we'll keep an eye out for that coming at 2 o'clock. We also had last night, just in terms of oil, we had the API numbers, which is a private survey. So we had a build in the crude oil of 2.8 million last night. Now, if we actually look at what's expected today, apparently, although we're getting this message here from Bloomberg, government data releases are impacted by shutdown, apparently the Department of Energy is still collecting data and will actually release this at 10:30. I'm not 100% convinced of that, but that is the situation as of this morning. As I said, API last night came in at plus 2.8. We're expecting a 500,000 barrel inventory here. So let's see what happens there. Again, there's been a lot of talk about oil. It's a very complex situation at the moment. That on one side you have people saying that there's, the OPEC Plus is increasing its output, that global surpluses are rising, inventories are rising globally. There's a lot of oil on ships just sort of floating around looking for sellers, looking for buyers rather. On the other hand, you also have another sort of way of looking at the oil market to say that the global economy is in reasonable shape, and also that OPEC Plus members are talking about increasing output, but the reality is that with the exception of Saudi Arabia, a lot of them are actually maxed out in terms of their production capacity. And so the reality is that not that much new oil will actually be coming onto the market over the next month or two or three. So it's a kind of a confused situation here. If you actually look at actually just going back to these numbers before we look on the chart, gasoline last night at API came in at minus 1.2, so that was a draw, so that's positive. And expected here gasoline to come in at 1.5 negative, which would be positive as well. So let's keep an eye out for those numbers. If we actually look at the chart of oil, which I'll just bring up in a moment as I grab some tea here. Excuse me for that. So if we look at oil, as I say, it did get to the bottom of its range, but it's broken out a little bit. So this range here, I was thinking maybe it was going to sort of just fall through and push through, but it has been rejected, and it's now at quite an interesting level here. You see, it's starting to reach some. This is a positive breakout here. It has to battle through a lot of moving averages here. You see here, basically you have a confluence of the 50, 100, and 200 EMAs here. Also, if you take this recent impulse from the 25th of September, you can see we're now at the 38% fib. So this is a strong green candle, and this was a pretty strong rejection from that level. It didn't ultimately break down through there. So this is the key moment for the bulls, because if it fails here and it gets like resisted here, that will simply just be a reactive bounce from a pretty strong support level. On the other hand, if they can push through some of these moving averages here, push up into, let's say, the 38 and the 50% fib retracement, you could argue that maybe that was a legitimate bottom, and that the market has decided that ultimately the market is in balance and we don't need to worry for the moment. So, but as I say, this is quite an even situation here. Maybe we'll have more information today. So far, so good for the bulls. Let's keep an eye on that. Similar kind of situation if you look at gasoline here. Again, it bounced off this sort of level and is now a little bit more positive than the crude market. As you can see, it's broken above, some of the longer term moving averages and actually has a bit more of a positive price action. So energy looking, relatively positive, but a little bit more work to do with oil before we can say that that's in a bullish trend. Okay, so I think I might leave it there, guys. Just in terms of the equities, I don't have a huge amount to say. We have equities losing just a little bit of energy here. You can see that, starting to flatten out, and definitely, sort of the energy is coming out of the markets here. We're starting to get some earnings we have on tomorrow. I believe it's Delta Airlines starting tomorrow. So we are starting to get some earnings coming out, and it will be interesting looking at things like Delta if they talk about the state of the U.S. consumer and their view of what's happening in demand. Okay, have a great day. As I say, no particular data is being released today. It's going to be a bunch of Fed speakers. We have the FOMC minutes, as I say, at 2 o'clock, and no doubt our friend Mr. Trump and others will be on the wires. Thank you. Have a great day, and we'll keep this going tomorrow.